Hey, what's up, everybody? So today I wanted to share this Excel calculator that I built that analyzes rental properties. And before we get going, if you're interested in this, look down in the video description for the link on how to get it. So the way that this is laid out, there is 5 tabs, and you want to work through the tabs going left to right. The first tab here that we're in is the directions. Just go ahead and give it a quick read to get a general idea of how it works. And we're going to go over to tab 1. So tab 1 is the property improvement cost tab, and you're going to want to go down, and if any of these items needs any work, you're going to want to assign a dollar value to that item depending on how much work it needs. So you just kind of work through this list, enter dollar amounts, and then it automatically sums a total up here for how much it's going to cost to repair, improve, remodel the property. So right now I'm going to go through and fill out some random stuff, and you'll see how it works. All right, so that's it. I filled in some items down below of certain costs that might be associated with repairing or remodeling a rental property, and it automatically summed it up right here, the $31,340. So we're done with this tab. We're going to move on to tab number 2. So tab number 2 is the transaction information, and you're going to want to fill this out as accurately as possible to get the best possible estimation on your cash flow and your cap rate and things like that. So the first thing we're going to do is fill out the purchase price of the property. I'm going to say it cost $125,000. And the next cell below that is automatically calculated from the previous tab. So this is the property improvement cost. And then below that takes your purchase price, your property improvement cost, and sums that up to get you a total investment amount of $156,340. So then the next cell right here is the market value of the property after the repairs upgrades have been made. So hopefully when you make all these repairs and upgrades, the value of your property will also increase. So I'm going to say that increased to $170,000. And my property taxes are $1,200 a year. My property insurance is $1,000 a year. My monthly utilities are $450. And the tenant is to pay utilities, so I'm going to say yes. And maintenance and other expenses. So whenever you see a little red caret in the corner is where I put a note. So you can see this should include things like capital expenditures, repairs and maintenance, homeowners association fees, and so on. And the CapEx and repair and maintenance are both about 5 to 10% of the total rent collected apiece, generally. That's not a hard and fast rule, but that's just what a lot of investors do. It's just FYI. So for this, I'm going to put $400 a month. So that was it for the expenses section. Now we're down to the loan information. And I'm going to say I got a loan for $100,000. And I'm going to say the annual interest rate was 3%. Closing costs were $1,200. And a little note, the closing cost also gets added up here for the total dollars invested. Loan period is 30 years. And here you have the option of putting in an extra monthly payment towards the principal on your mortgage. I'm going to opt not to do that. I'm just going to leave it blank. So here it automatically calculates your loan payment based on the information that you put up here, and will let you know how much interest you're going to pay over the life of the loan. So my loan payment is $421.60, and over the 30 years of the loan, I'm going to pay $51,777 in interest. If you want further information on the loan, go to tab number 4. We'll shoot over there real quick. This is the loan amortization schedule, and it automatically calculates in the background. You don't have to pay any attention to it. Just know that it's there, and you can look at it if you want. Let's go back to tab number 2. All right, so now we're done with the loan information section, and we're going to go down to the estimated cash flow section. So in this cell, I need to fill out my rental income per month. I'm going to say it's $1,500. And if I'm going to use a property manager, I need to put in their percent fee. So I'm going to put in a 10% fee. And right here, it automatically calculates the cash flow per month based on your expenses and your rental income, and then your cash flow per year for the property. So the next section is the future market predictions. In the first cell here, it's the percent property appreciation per year. In the second cell, it's the percent increase in rent you're going to be charging per year. The third cell is the percent increase in expenses per year. And the fourth cell is the percent vacancy rate. So adjust these to whatever you feel comfortable with. I would err on the conservative side, and you can also play around with these numbers to do best case versus worst case scenario. So I'm going to up my vacancy rate to 10% and see what happens. So as you can see, my cash flow dropped about $100 per month. It was $255, went down to $165. So I'm going to change it back to 5%. All right. So that's it. We are now all done filling things out, and now we can look at what the results are. If you go down below to this table, you can kind of look through to see what the property is going to do. So this first column here is years, and I run the data out 35 total years. Second column is market value over time, and this is based on what percent appreciation you put down. So the value is going to rise 3% per year. And then over here, this is the amount left on your loan after every year. You just work down the list, you see it continues to drop until you get to year 30, and then you're done. This is 30-year loan term. So then after that, we have the equity, which is the market value minus the remaining loan balance. So column C minus column D is going to give you the total equity in the property. And here you got the total appreciation, which is the market value minus the total investment, so how much the property has gone up in value. Here is the gross rent made every year, and that's going to go up the 2% that you have it set up here. So you're going to consistently charge 2% more every year. That's going to be your target. This is the rent made total cumulative. So whenever there's cumulative under the header, that means year over year you're going to keep adding on top of what was already there to get, a running total. Here's your property management fees, your total expenses per year based off what you filled out in the first section. So a quick side note about the total expenses per year. The reason that I asked if the tenant is going to pay the utilities or not is because of this formula right up here. So if the tenant is to pay utilities, I'm going to take the percent that the property is estimated to be vacant, and I'm going to multiply that by the cost of utilities for the year, and I'm going to add it to the expenses. So then that is going to take into account the cost of utilities that you're going to have to pay when the property is vacant. Versus if the answer is no, you're going to pay the utilities, then I'm going to take up the total cost of utilities for the year, and I'm going to add it into the expenses. Then here's your property management fee plus your total expenses. And here's your cumulative expenses year over year. They just keep adding on top of each other. Again, here's your cumulative interest year over year and your cash flow year over year, what it's going to do. So then right here is your net return. And this is cumulative as well. And this includes property appreciation. So then this column right here is the percent return on investment on the initial cash that you invested to get the deal going. And then this is the percent return on investment on the total amount that you had to invest, meaning the total amount that went into the deal, or the 157,000 up here. And this is very similar to cap rate, except that I include property appreciation. I also include interest in this calculation, which generally you're not supposed to include interest in cap rate, but I wanted to see what the total dollars in and the total dollars out look like. And if you're going to use a loan, it makes the most realistic sense to look at it that way. Let me know what you guys think in the comments if you like this or not. I thought it was good to leave it this way. I might change it back to be pure cap rate later, but again, I like to look at it like total dollars in, total dollars out. And then this last column is your percent target of 100% return on investment. All right, so let's go on to tab 3. So tab 3 is the deal summary. It kind of goes over everything and hits all the high key performance indicators that you might want to look for to see if this is a good deal or not. So the first cell up here is the total cash needed to complete the deal. This is the cash you're going to have to come up with to get the deal to work. The second is the initial monthly cash flow. This is the cash flow that you're going to be getting in excess after all the expenses are paid right out of the gate. And the third cell here is the cash on cash return. I'm not going to go into that, but there's a little note over here that kind of explains what it is. The next cell is the percent ROI of the initial cash invested after 1 year. And then this cell is similar to cap rate, and this is how many years it's going to take for you to get 100% cap rate. So that initial $157,000 that you used to purchase the property, after 12 years, the appreciation and the total amount that you collected in rent will be equal to that $157,000. And if you were to sell that property, you would essentially get 100% return on investment. So the next cell is the total property appreciation at 12 years. And the cell below that is the total dollars rent earned at 12 years. And these two are actually displayed over here in this graph, so you can kind of see, okay, how much is this property earning on appreciation versus the rent. Then down here is the years it's going to take you to pay off the loan and the market value of the property once it's paid off. All right, so then down here I have 4 graphs. This first graph is the percent return on investment of the initial cash invested. And this line right here represents 100% return on investment. So you're going to get 100% return on investment at about 4 years, and it's just going to keep going up from there. The second graph is very similar to the first graph. This line is the 100% return on investment, but this is the percent ROI of the total cash invested and is very similar to cap rate. And you're going to cross that threshold of 100% at about year 12. Then down here is the property value versus the loan amount. And this spread between the two is the equity that you have in the property. So as you can see, as you pay down the loan, slowly goes down. At year 30, it's 0. Then here, as the property appreciation continues to go up, the equity spread gets larger and larger. And last but not least is the cash flow per year. So initially, the cash flow just goes up because I'm charging more in rent every year, 2%. And then once you pay off the property, right here is you get a big jump in cash flow. So it'll kind of graph that for you so you can see, okay, once I get this property paid off, this is how much I'm going to be making. And you can play around with that. So like if you come back over here to this tab and you put in $100 that you're going to pay per month, you can see what it does over here to your loan deal. So it completely changes these graphs to where your cash flow jumps here at like year 20, it jumps up significantly. You come up here, you're going to pay off the loan in 21 years. So, it kind of will instantly go through and change all the parameters if you change one thing. And it's worth going back and kind of going over worst case and best case scenarios. So play around with these down here. Play around with, some of the remodeling cost numbers potentially to see, okay, if I do this now versus later, how is that going to affect my investment? So that's pretty much it. If you have any questions, go ahead and drop them down in the comments and I'll do my best to answer them. And again, check down in the video description for the link on where to get this Excel calculator. Also, if you end up using this and you really like it and you want to show some appreciation, right here's a couple ways you can do so. They both cost you nothing. And as always, if you found this video helpful, please hit the like and subscribe, and I'll catch you guys next time.